Time for our weekly market monitor. He has 3 picks for us this week that he says can thread the needle between risk awareness and steady growth. Joining us this week, Mike Bailey. He's Director of Research at FBB Capital Markets. Mike, thanks for joining us this week.
Great to be back.
You've got 2 defensive plays and then a growth play. First defensive play, very much a household name, Clorox. Why that one?
So Clorox, some of our picks this week are relative, compared to something. So for Clorox, one of the things we like the space. So if you want to be defensive, consumer staple is a great place to be. What do you want to own? Do you want to own, the highest quality name, or maybe something, that's a little bit cheaper? So for us, Clorox actually has gotten a bit cheaper relative to some of the others. So for example, Procter & Gamble, a very nice company, has been around for a long time. That one's actually gotten pretty expensive. So we think in the space, you want to own a high quality company that at a discount. Clorox, interestingly, is a lot smaller. So they actually benefit from sort of the law of small numbers, which means they can grow nicely for a number of years. So I think as you think about Clorox versus a bigger competitor, you want to stick with something that's a little bit more attractive in terms of valuation.
Next on the list is Eli Lilly. It's a defensive play in your book, but it also offers growth at a reasonable valuation.
That's right. So again, on that theme of sort of relative, Eli Lilly, interestingly, is kind of turning the corner from a boring sort of slow growth drug company. They're actually starting to speed up. They've got some interesting diabetes drugs, some drugs for cancer. In some ways, the new Lilly is sort of like the old biotech. Mm-hmm. So in the good old days, 5-10 years ago, big biotech companies were growing 15-20% a year, and they had big, expensive valuations. Lilly actually is starting to turn into that. It's a big company. It's going to be growing very quickly. And we think the valuation is actually pretty reasonable. In fact, you're sort of paying the same price as you would for the whole stock market. For a company like Lilly, it's got a nice dividend. It's growing much faster. We think that's pretty compelling.
Now, your growth play is Salesforce.com, of course, the pioneer in customer relationship management. But as a growth play, does that mean if the economy slows down, so does this company?
Well, it could. It certainly could. If it's a high growth company now, if you're seeing layoffs and things across the board, certainly this company's going to feel a little bit of heat. Again, going back to that theme of thinking from a relative basis, if you already own some defensive, maybe slower growth names, you want to kind of jazz it up and add a little bit of growth to it. So this is a higher growth company. You're right. If we hit a recession in the near term, a big growth company like Salesforce, they'll slow down a bit. However, we think some of that maybe skepticism may be a little bit overblown. So they sell a lot of software into governments, into nonprofits, into areas that we think even in a recession you're going to still see some spending. So additionally, if you're looking to save costs, if you're a big bank or something, if you cut off your Salesforce business, that's what actually drives new customers. So it seems like that's something you probably want to stick around with even during a recession.
In the 30 seconds we have left, Mike, do you feel as though we're headed for a recession, or do you think the economy is really doing pretty well?
I think we're in pretty good shape. For what it's worth, as an anecdote, I just passed the Apple store on the way here. There's a line out the door. There's new Apple phones coming through. So if you think about the consumer, they're in pretty good shape. There's some other risk factors out there. I think you really have to balance that out. I think we're in pretty good shape for a few more quarters until you start to see a slowdown.
Mike Bailey with FBB Capital Partners. Good to see you again, Mike. Thanks for joining us.
Great. Thank you.